Good morning, everyone. This is Fabio, CEO and founder of MenthorQ. Welcome again to our product training session. And today we're going to talk about blind spots. So very, very excited. We got a lot of questions, and the blind spots are one of our most powerful tools to identify hidden risk and opportunities in the market. And today we're going to go over the methodology, why they matter, how can you use them, and we're going to also share some very nice examples. So this is kind of like the agenda for today. So first we're going to go over what blind spots are, why we build them, why are they relevant, and how can we use them. And then at the end, we're going to do a live Q&A. So please, guys, send us any comments. We're going to reply to that at the end. So let's start with the definition of what they are. So blind spots are price zones where the market is likely to react sharply, but these zones aren't always obvious from standard charts. So they're not the typical support and resistance area. They're based on more advanced models, and we're going to go into more details in a second. They arise because the markets are interconnected, and price movements in one asset can actually influence the other asset in very, very different way. So understanding how different assets interact is very, very important to make decisions. And what we've done at MenthorQ is we've developed the concept of blind spots levels to help traders identify overlooked areas of market movement, and those can become hidden signals that can help you either confirm a trade, react to a trade, or even like manage the trade with your trading plan. What blind spots are not, they're not the typical support and resistance levels. They're derived from our proprietary models that combine option positioning, gamma exposure, volatility structure, and more. So why are they relevant? Because they reveal things that traders cannot see. So they often mark liquidity areas or hedging pressure zones coming from correlated assets. And when price hits those areas, market makers might need to adjust positioning, and that could actually trigger sharp volatility moves, sharp liquidity moves, etc. So retail traders typically have no visibility on these levels. So spotting them can give you really a true hedge and a true advantage when trading and when confirming your trade. So basically what they do is they can help you basically understand when we are facing reversal areas so that you can avoid being trapped in the price action, and you can also use them to position yourself to get a better hedge in the market. Let's talk about asset coverage, right? So blind spots are available on many different assets. Firstly, we built blind spots for futures, indices, and ETFs. So for those who are trading SPY or QQQ, you have blind spots there. In May, we released blind spots on Forex. And basically today, we're also going to show you the new blind spots levels on major stocks, in particular our Max 7 coverage. So now blind spots are really covering a large variety of assets. Let's now look at why we develop them. Let's try and go over some of the methodology, and then of course, guys, feel free to share any comments or questions. So blind spots are leveraging 3 critical data inputs, and we're going to share why each one of them is essential. So the first is option positioning, right? Option markets reflect what advanced traders' sentiment and expectations are. So if we are able to analyze the net buying and selling pressure coming from the option market, we can actually gain insights where the large players are positioning themselves, where the areas that they are looking to target are, and what are the areas that we should be aware of from a risk management perspective. So by looking at this data, we can actually reveal potential areas of support and resistance that might not be visible in the underlying asset price alone. And then, of course, option positioning can help us highlight where market participants are actually putting their money. So option data is actually forward-looking, while support and resistance coming from traditional technical indicators are actually looking at the past. So the advantage of having option data with your chart is that you're actually looking at the future and looking at areas that the market is targeting. The second input is momentum. So momentum can help us measure the strength of and direction of price movement, and basically understanding momentum divergence can really help us get some really good insights on what are the areas that we should be looking for. And incorporating momentum really can help the model identify when the price can be vulnerable for sharp moves, even if we don't see a traditional pattern coming from our technical indicator. So adding momentum can give us a lot of value there. And then finally, the third aspect is cross-asset correlation. We're going to show you some examples very, very soon. But basically, it's important to understand that markets are interconnected, and the move of an asset rarely happens in isolation, right? So if you trade stocks like Nvidia or Tesla, you need to be able to analyze what's going on in the overall markets and what are the assets that can actually impact the asset or the ticker that you're trading. So by analyzing cross-asset correlations, the model can capture how price movement in one asset can actually influence others. So for example, if we see a shift in a major commodity or currency, that can have a ripple effect through stocks or indices as well. And that's very, very important. So what the blind spots can do is really uncover those hidden signals coming from correlated assets that can actually impact the price action of the asset that you trade. So by combining option positioning, momentum, and asset correlations, the blind spot models can create a comprehensive data-driven view of where the market reactions are most likely to be. And basically, those blind zones can actually help you understand when to take a trade, how to manage your trade, and how to manage your risk as well. So the goal in the end is really giving you access to a tool that can provide you an advantage or an edge. So going back to obviously the concept of asset correlation, again, very, very important to stress it. Markets do not move in isolation, and many assets are highly correlated with each other, meaning that their prices tends to move together because they share common drivers, like, for example, macro conditions, interest rate, sector flows, and so on. So understanding these correlations can help you really improve the timing of your trade, increase the confidence in your trade, and reduce the risk. This is a very nice example, and we try to simplify this in a chart. So for example, if we look here, we see kind of like a knowledge graph structure where we have our SPX in the left, and we can see that SPX is highly correlated with other assets like VIX, QQQ, SPY, even Bitcoin. And then on the other hand, we have our NQ, and NQ is highly correlated with our Max 7 companies. And then, of course, at the bottom, we have things like gold that are highly correlated with currency and other factors. So by understanding this correlation and how this moves, and this is, of course, a complex model that we have on our back end, can help you really get a really good information on the asset that you trade. Here we see some typical correlation that probably everyone is aware of, but it's very, very important to understand. This is like the correlation between stocks and bonds, between gold and US dollar, between stock indices and commodities, of course, equities and VIX, very, very important, oil versus currencies, and then, of course, the US dollar versus our emerging market currencies, and so on. So let's take another example. If we look at the Max 7, and this what you see here is the composition of the top holding of the SPX. So if you look at the top 10 holding, which is about 38%, the Max 7 account for the majority of that. So 7 companies within the index are actually driving the price action. So if something happens with Nvidia or Tesla or Apple, that's going to have an impact on the SPX. And even if you don't trade those assets, you need to be aware of things that are happening there. So this is a very good example here. This is NVIDIA on the left and NQ on the right. So when one of these correlated assets hits a high, like a strong gamma level, this is where a zone where market makers typically have significant hedging exposure, right? So this action can actually spill over correlated assets. So here what we see is NVIDIA hit one of the big gamma levels, our JAX5, drop all the way down. And as a result, we don't have the gamma levels on NQ because we want to show you how the correlation between that move can actually impact the other. So here you see a very good example. So imagine why is this important? Because again, we saw from the previous chart that NVIDIA accounts for about 80% of the index. And if NVIDIA breaks through a level, a very important level, the correlated asset like SPX or NQ or NDX will be impacted. And that's why having blind spots together with gamma levels can give you a very good key advantage. So how can we use blind spots? And we're going to show you some examples. We can use them in really different ways, right? So we can use them as target zones. So if you are in a trade and you see that there is a blind spots area right above it or below if you're short, then that could be an area where you could take potential partial profits, or if you are to the opposite side, you could actually use as stop loss targets. They can also be used for entries. So you could actually use the blind spots when the price approaches a blind spot, and if that's in line with your bias, then it could be a great place to enter a position for a reaction. They can also be used to manage risk. So again, let's say that you are thinking about opening a trade, but you see a very strong blind spots against the direction. Maybe that's a signal that you might want to consider and take into action. And then, of course, for confluence. So imagine that you have a strategy, you have an edge, but this strategy can help you use other factors, and together combining blind spots together with our gamma levels, maybe our Q-score data, and your own technical zones can actually increase conviction and increase potentially the profitability of your strategy. So let's go over why we created them, and then let's give you some examples. When we launched our gamma levels, we did not cover futures at the beginning. So we had a lot of futures traders that wanted to use gamma levels on futures like ES or NQ, but they were not able to do that because we didn't have the data just yet. So what they wanted to do, what they were doing at that time, is convert levels that would move closely together, like SPX or QQQ, to the futures that they were trading. So they were converting SPX levels to ES or QQQ levels to NQ, which is still very possible in the platform. But then we took it a step further, and that's when we created blind spots. So let's look at this chart here, right? Let's see if I can show you. Okay. What you see from this chart is 6 different graphs. This represents the net gamma exposure of the index on the left. So we have NDX at the top and SPX at the bottom. And then we have the ETF, so QQQ and SPY. And then we have the future net gamma exposure. So as you can see clearly from just looking at the image, the 3 option chains are completely different. So even though those assets are moving in the same direction and they represent the same kind of market, same asset, the actual option chain is completely different. So if you are not looking at this type of information, then you could potentially miss out on really interesting opportunities. And that's why it's important to understand how correlated assets are moving. And I want to also share now an example right in the platform. So let's go over an example from today. So today we look at SPX, right? So we open up the dashboard August 18, 2025, and we immediately want to look at the Q score. So when we look at the dashboard here, we see that we are in a neutral position on SPX. So the option activity kind of like is neutral. From 0 to 5 is our score. We are at the score of 3. So we're not bullish, we're not bearish. So we are really in a neutral stance. Our momentum is still very high, and we have a slightly negative seasonality. But if we are looking at the data, the option chain, we are in a positive gamma condition on SPX. And if we look at the matrix, overall, we see positive positioning across the full option chain, right? So that means that clearly we're still in a positive gamma environment. Our swing model is still in a bullish bias, and that's very, very interesting. But what about if we move and we look at a correlated asset like SPY? So in this case, the assets represent the same underlying factor, the same market, the US top 500 companies, but we see a completely different picture. So we see a very low option activity on SPY. We are in a negative gamma condition on SPY. We are also in a bearish bias coming from our swing trading model. And if you look at the option chain, we also see a lot of negative positioning across the next few weeks and months. So why is this important? Because always you need to look at asset correlation, and you need to look at what type of investors are trading both assets. So if we go back into our presentation, let me just go back here. So let's look at the different chains, and let's look at why this is relevant. So when we look at SPX, typically we see a lot of institutional flows. SPX options are cash settled, so typically large institutions might use those for short-term hedges and so on. When we look at SPY, SPY is mostly used by retail and asset managers, and typically they have a longer time horizon. So they are not investing for the short term, but they're actually investing for the future, for like getting a return on the assets. Think about 401k plans, the Berkshire of the world. Those are investing in SPY for a longer period. And then, of course, you have ES, which is really more like futures market makers, institutionals, prop trading firms, CTAs funds, and so on. So again, we know that there are different customers trading these assets. This is a very good information. So what I can see from this analysis that most likely we have a lot of events coming on this week. We have FOMC, we have NVIDIA earnings coming. So I think when we look at SPY, a lot of the investors are actually maybe seeking protection and positioning themselves for more hedging activity. That's why you see a different value in the option chain. But again, why is this important? Because having this at your disposal can actually give you some really interesting clue when trading futures or even the SPX. Another example on why blind spots are key is for those trading Dow Jones. YM futures does not have any option activity. There's no options on the future. So again, we cannot produce gamma levels. We cannot produce gamma levels there, but we can actually give you some really good insights by using our blind spots levels. So for those trading YM, we still have a great solution for you guys. You can use our blind spots, and basically that can help you understand those areas that might be overlooked. And without any option activity on YM, you will not be able to use any of the option levels. So the blind spots can really help you understand how the market can react at certain levels. So a lot of questions that we get is the ranking of blind spots. So the models really find zones where price levels from multiple correlated assets overlap, creating clusters of potential market reaction point. These zones are ranked from BL1 that you see at the top to BL10 based on the number of overlaps, right? So the blind spots level is a bit different from our gamma levels. So what we have with BL1, which is BL1 represents the strongest cluster with the highest number of overlapping price levels, right? So again, it's a very, very strong level because we see a lot of reaction zones in the same clusters of areas. With BL10, we have fewer overlaps, but that doesn't mean that is not as relevant, as it might, it might not have as many overlapping price as BL1, but it can still be a very, very strong reaction zone. So again, the ranking measure the number of overlapping, not the density. So that's why BL10 can just be as critical as BL1 if market condition align. So I always don't look at the label, just look at the levels and get them aligned with your price action and your strategy. All right, now we're going to go into some use cases, and then we're going to go into the charts. We're going to show you also the indicator, but let's start with the use cases. We're going to start with Forex. We released our blind spots on Forex about a few months ago, and I think the model is actually very unique and can provide a lot of really great advantage. So let's go over why we develop it first and why it can be important for Forex traders. So the Forex market presents a unique challenge for us. The Forex market is fragmented, mostly is operated over the counter, so OTC markets. So there's really a lack of a centralized exchange. And again, price discovery, data transparency is also an issue because we don't have a repository of data that we can use. So even like the options on Forex are very, very hard to get, and there's not a lot of data available there, right? So they're very, very different from the stock market or the futures market. So that's why the blind spot model adapt to these characteristics by leveraging a combination of diverse data sources and advanced analytics. We look at, for example, option positions, option positioning by looking at the Forex futures data that we have. We look at the option flow coming from that asset and where big players can be positioned there. We also look at momentum indicators to understand how different Forex pairs are moving together. And of course, cross-asset correlation is specifically valuable in Forex. Because currencies pairs are really linked through economic relationship and global capital flow. So we can actually derive a lot of interesting correlation coming from the Forex world, and we can apply that by integrating these inputs in our blind spot model that can help us identify actionable zones where the price would be likely to react. So for Forex traders, you can actually combine blind spots with your technical indicators, with your support and resistance areas, and that can become a very great tool for you guys. If we look at our Forex coverage, we cover right now our major pairs. So we have Australian dollars, Swiss franc, British pound, gold, Canadian dollar, JPY, euro, and so on. So those are all available. Blind spots are both available on the currency pair as well as the future assets, so 6A, 6B, and so on. So those are all available within the indicator. Let's look at some examples. So here we have an example from a week ago or so on the US Canadian dollar Forex pair. So as you can see, like really the price moved around those blind spot areas. They could have offered a lot of interesting entry and trigger points. So if you were in a trade, you could have used that as your target, or you could have used that to initiate a trade, especially those BL2, BL3 areas. Very, very interesting move there. So very, very important. Same thing on euro. So here we have a reversal trade at around BL8. The price moved, stalled around BL9 and went all the way up to BL3 and then reversed back. So you could have taken a trade at BL8, you could have take partial profit at BL9, and you could have take full profit at BL3, or you could have also taken potentially a reversal trade at BL3 at the top when the price action would align with your strategy. Here is another example with JPY. First, we have a very strong potential entry point at BL1 at the bottom here on the center of the chart. Then the price moved to BL7 and BL2 and kind of like went in a range for the whole day. So depending on whether you're a scalper or a position trader, you could have used that data to potentially understand entry, exit, or even manage your risk right there. Another example on Aussie dollar, again here, very nice move from BL8 at the bottom to BL6 at the top, and then a reversal almost all the way down to BL9. Another example, Canadian dollar, from BL3 all the way to BL1, price kind of like range a little bit on that BL4, BL5 area, and then reverse back. Right, now let's go over why blind spots on futures can actually be very important, and we're going to go over some examples. So the first, what the model does is analyze option flow on correlated assets to detect where large traders are placing significant bets, whether bullish or bearish. This option activity can reveal hidden market expectation beyond what price alone can show, right? So for example, if you're trading the ES, S&P 500 contract, or the NQ, they are highly correlated with assets like the Mag 7 companies, gold prices, VIX, crude oil, and even Bitcoin. So understanding the correlation between these assets can be very important. So we combine option positioning, momentum, and cross-asset correlation to create the blind spots that can actually provide you a multidimensional view to help you understand the areas where you could potentially forecast a move, or also manage your risk and get like better information coming from correlated assets. This is an example on NQ. So we saw a rejection here. This was from last week at BL1, all the way down to BL10. BL10 was a great reversal point for a potential trade to the upside. Same picture on ES. Price stalled around BL4 area, moved all the way down to BL8, and then reversed back, crossing over BL1. So again, very, very important. CL, again, we are seeing a rejection of the BL8 level, coming all the way down, stopping at BL6 for a potential reversal, all the way to BL7, and then all the way down to BL2. So those can be very, very important areas. Gold, again, this is a good example from last week. Price stalled for a majority of the day at BL1, dropped all the way down, and then again found support at BL3. YM, again, for those who are trading Dow Jones futures, very, very important. There's not a lot of data coming from the option market there, so you can use the blind spot as areas for your targets. And you can see here another good example on YM. All right, now we are very excited because this is new, is not officially being released, but because we are doing this presentation, I want to show you guys what we have. So we are now have blind spots also on stocks, and we are starting from our Mag 7, and we will expand this in the future. So this is really brand new for you guys. And what we look at when we talk about stocks is option driven risk mapping. So we are trying to reveal what the option flow is telling us, and not just looking at price and volume. We're trying to find high liquidity zones where the price could actually flip. And then, of course, every asset is different, so the model actually adapts. We calculate it daily, so it can account for example, earnings event and so on. And of course, the goal of this model is to turn complex option positioning into clear zones on your chart. So again, we said that we currently cover Mag 7, so all the big Mag 7 companies, and we're going to show you some examples. And then this is, for example, what you see on NVIDIA. This is an example from last week. We have Apple here, so you can see how you can combine, for example, JAX levels together with blind spots. And yeah, and then we're going to go into some charts as well. So stay tuned. But to conclude, more like the the presentation of what blind spots are. So why are they relevant, right? Again, remember the concept where if you're a trader, you have a lot of information, there's a lot of data out there. You need to be able to simplify complex data to be actually actionable and be able to take more accurate decisions in a timely way, because again, time is money and money is time, right? Very, very important. You can get a comprehensive market view by looking at asset correlation of different assets. That's very important. You can also use this indicator for risk management. Risk is very key, especially when we have high volatility. So understanding areas where you could face additional risk can be very important. And then finally, you're actually trading using data. So you are avoiding emotions and you're actually leveraging a data-driven system, which can actually be very, very powerful. All right, so what we're going to do now is we are going to go into some charts, and then we're going to answer any questions that you might have. So let me just give me 1 second. All right, so first we're going to go over our blind spots level indicator, and we're going to show you what you can do within the indicator. So you can find, once you connect your TradingView account, you can actually find the blind spots level indicator under your invite only sections right here. You can add it to the chart, and then you can go into the settings. So what we do is we auto update the blind spots level every day. So every morning you just need to remove and re-add the indicator. Just make sure you always confirm the timestamps. The blind spots level are updated every day, Monday to Friday at 11 p.m. Eastern. So just make sure that you do have the latest data available. If you don't, just simply remove the indicator and add it back. Once you have the indicator, you have some sort of customization. So you can hide the timestamp. You can choose, you can add a table if you wanted to, and then you can customize the levels. So I can actually, if I wanted to, change the color of the single levels or change the color of the overall level. So if I want to have all of them, I can just simply change the color here, and this will help me change the levels as well. Then really interesting features. You also have the conversion on blind spots. There's not really need to convert because we already account that. But if you wanted to convert, for example, SPX blind spots to NVIDIA or any other asset, you could actually do it by simply clicking the box here and just simply changing the ticker. So here, for example, we could have blind spots of SPX. Actually, let's look at Palantir, for example, and then we can do that, and then we can simply go on to the ticker that we converted from, and then here you will have basically your SPX blind spots converted to that ticker again. Within blind spots, we also have the trading roadmap feature. This is very powerful because you can actually come here and create a roadmap. Just you need to modify the ratios. So depending on the asset that you trade, you might want to increase or decrease the ratio. So here what we have is, for example, our ratio of 4, and we can create basically a box or a set of areas where we might want to trade. We can also remove the levels, and we can also then combine it with our gamma levels here as well. So as you can see, we're now combining blind spot areas together with gamma levels for better risk management and trading trading roadmap as well. So before we go into questions, let's look at some examples. So let's look at yes to start with. So we're going to open our yes chart, and today was very interesting. So the market moved up in the morning sharply and went all the way to this BL9 area. We can also combine that with our gamma levels. This area was also confirmed with one of our JAX level here. And then, of course, we had our BL1 and our kind of like HVL put support there. And then again, very important, we have our BL3 and our 1-day minimum. So as you can see, very, very easy. We can build basically a quick roadmap where you could actually look at trade ideas, look at stops, profit, very, very easy on ES. And again, very, very actionable. We have gamma levels, we have blind spots, and we can create those boxes. Next, we can go and look at QQQ. Same thing, we open lower, we stalled around this blind spot area here, and then we went all the way down, kind of stalled again, retest that BL2 area. And again, if we then combine it together with our gamma levels, this was a very important area with also our core resistance, gamma wall, and then of course here we have our 1-day minimum we broke down, and we're now at put support. Let's look at another example, IWM. So IWM, again, we opened higher, we went all the way through, tried to break our BL7, we couldn't break, so we had a very important area here, and then we went all the way down there. Confirmed with gamma levels, we not only have our blind spots, we also have a very big gamma level here, so this could have become very, very nice area for potential entry, potential exit, and so on. Okay. Now let's look at some example on Tesla. And here we want to just hide the blind spots for a second. Again, same picture. Tesla open higher. We went all the way through our blind spot 7, drop all the way down, and then now we bounce back at our blind spot 6. If we then add our gamma levels, you can actually see and you can start building areas where you might want to target, or areas where you might want to get in a trade and potentially find some really interesting opportunities there. So you have this area here, you have a break, strong break all the way here, GX1 and BL8. So again, we can hide the levels. You have your blind spots, you have your trade ideas. Again, this can be very, very important for you guys. Let's look at Microsoft. Great, another good example. We open lower, we went all the way to BL10. We kind of stalled around this area for a while, and then we went all the way here. BL3, price basically found support, got rejected. If we add gamma levels, we can also see where the major gamma levels are. But again, very important, BL3 area, this could have been a nice rejection right there on Microsoft. Let's go on Google. Same picture, dropped at the open, found support initially at BL2, dropped all the way down to BL8, and then BL8 was kind of, for now, the low for the day. And this could have been a nice area for a reversal trade, or again, if you were on the short side, this could have been a nice area to potentially take partial or full profit as well. All right, now let's go into some currency pairs for today. So we look at US CAD, Canadian dollar. So if you look at Canadian dollar, then you see basically that all the way throughout the morning, overnight, we are stalling around this BL3 area. Again, this was a big move all the way up, breaking through all these different boxes. Those can become targets, can become additional entry points. So we break through BL2, we retest BL2, we went all the way to BL1, we retest BL1, and then we go all the way to BL10. So again, very, very, very nice areas there as well. Let's go Euro. The Euro, again, we couldn't break through BL8. We went all the way down and found support around this area, almost to the tick. And then now we're back at BL8. So again, very, very nice. Boom, bounce back, move back again to that BL8 level. Let's go Aussie dollars. Again, the whole morning we had some good support at BL9. We broke through BL2, and then this was the start of a really nice upside move, and the target areas could have become BL4, BL3, and now we're targeting BL7. Got JPY for a second as well. What we see here is BL7 acting as resistance, and then obviously we have BL4 acting as strong support until we break down, and now we're kind of in a range in this area here. So another good example on Forex. So this again is a very good indicator, which is versatile, multiple assets, and can also be combined with your gamma levels, right? So we have our gamma levels here together with a blind spot on basically the major asset that you guys most likely will be trading. So now I think let's go over maybe some questions and see if we can answer any of those. So good question from Lima Chris. Are gamma levels intraday or real time? Gamma levels, we have two indicators. We have the end of day right here, and we have the intraday. The intraday indicator updates 14 times per day, so every 30 minutes roughly. So it's not real time. It updates 14 times per day, but also it's very important because the way we do it is we do it so you can actually gain some really good insights. Real time levels would probably cause more noise, so it's very important that you also understand what's changing and what's going on in the market. Are these spot Forex chart? Yes, we have both spot Forex and futures. So you can use the blind spots levels on both charts. So you can use them on the future and you can use them on the spot. Andres, very good questions. Yes, absolutely. So blind spots can also be used for swing trading as well. So the idea behind it is that you want to uncover those hidden areas, and the blind spots can help you potentially find also like entries for your swing trading setups as well. So very, very important. So as a key takeaway, like now, for those trading stocks, you can use them on Max 7 companies. We are going to increase the coverage. For those trading futures, you can use them on crude oil, gold, Bitcoin futures. You can use them on the Russell, for example, if you trade RTY as well, and basically they can work in conjunction with your gamma levels indicator right here, or you can use them standalone, depending on the strategy that you're working on, but they're very, very useful to find areas of confluence and find areas where there could be a strong reaction. So for example, here is a good example where, let's say that we only use gamma levels, we see our JAX 5, maybe you think JAX 5 is not as important, but then you had our blind spots level, and then suddenly you see that these JAX 5 areas also aligns with the important blind spot level, and you have BL1 there as well. So as you can see, the price doesn't make it through and then gets rejected right there. So very, very important to use it as confluence. Here as well, you have a very strong confluence of 3 blind spots together with 4 big level put support, high vol level put support ZDT. So again, trading in these areas could be very dangerous. So that's why having those levels can really help you even like stay away from maybe range trading or potential chop zones and stuff like that. Do we have a ticker to look at Max 7? No, you would use them one by one. So you would use the single ticker. So you would just type in the ticker and you would get the blind spots for that ticker. And let me know, guys, if you have questions on the reason why we develop, why is this relevant, and how to use them as well. Happy to answer any of this. I'm also going to leave you guys with the email. You can reach out to us anytime at info@mentorq.com for any questions. If you're interested to learn about the different models, if you're interested to learn about how to use them, how to find them, very, very important. Send us an email, and you can also set up a call with us if you want to. Thank you so much, Chris. All right, I don't see any other questions currently. Please, guys, reach out anytime. You can find us at mentorq.com. All the information about blind spots are also available within our product page, so you can find it there. And we're going to have more and more sessions. We're going to also show you how you can use those depending on your trading style. So stay tuned for our next product sessions. You can find them on YouTube or within our share calendar, within our membership. So if you are joining MentorQ, even if you have a free account, just come to our live events here. You will see them here, or just go to our homepage under news, and you will find the next event that we have. So stay tuned. We're going to have a very, very big webinar on Friday. So please join us, and yeah, don't miss it. Thank you, guys, and see you next time.